So if we go back to the balance sheet here, we're now going to be considering the accounts receivable generally, looking at reports that give us more information about it, noting that accounts receivable is an accrual type of account, meaning if you're in a simple type of business with regards to revenue generation and collection, such as gig work, for example, in which case you just get money going right into your bank account from a platform, possibly recording it with a bank feed, a deposit form, then you're not going to have to deal with accounts receivable. If you're at a cash register and you're at a food truck or a restaurant or something like that, you get paid at the same point in time. It's still more complex, even though it's kind of on a cash-based system, than a gig work situation, but at least you don't have to deal with accounts receivable. You don't have to call people up and say, hey, look, I did work for you before and you haven't paid me. Could you please pay me? And they're like, well, what have you done for me lately? Why would I do anything for you lately? You didn't pay me for the thing I did before. That's why I'm calling you. And you try to collect on the accounts receivable. It's a difficult thing. It's painful. It's annoying. But that's what we have to deal with. So we can look at subsidiary reports tracking the accounts receivable, which we would need if we do the work first, which is driven by industry, such as if you're a bookkeeper, a landscaper, a lawyer. Typically, you have to do the work, bill them for the work that was done, for example. All right, so normally we're going to go to the first tab and we track that information by going to possibly the sales tab, and we track it internally by looking at, for example, all sales forms, and we can look for the open invoices this way, thusly. We can look for the invoices, or we can more likely go to the invoice tab up top and look for those open invoices this way, sorting them, or we can go to the customers tab and we can sort internally this way and say we want the invoices possibly overdue or the open invoices. And then, of course, we can send statements, selecting the plus button and sending out statements to try to collect on the outstanding accounts receivable, which will basically summarize possibly multiple invoices, right, as an attempt to collect on it. Now, we want to note that these open invoices should tie out to what's in accounts receivable, which you might be able to see if you go to the invoices on this tab, for example. Sometimes they give us a total down here. They didn't give me a total down here. So that's harder to see sometimes, though. So we want to keep that in mind, that if I add up all the open invoices, that you would expect would add up to the amount in the accounts receivable. We can prove that to ourselves with actual reports breaking out the accounts receivable by outstanding balance. Outstanding balances from customers will be there because of invoices which have not yet been paid. So let's go to the first tab and check those report types out. We're on the reports on the left-hand side. In the standard tab, we scroll down and who owes you money. So that header tells you that we're basically talking about accounts receivable, because when would people owe us money as a business? When we did work and they haven't yet paid us for the work, typically. So all of these reports are usually, the first thing that should come to mind is they're going to be dealing with accounts receivable in some way. So we've got the accounts receivable aging summary. We've got the accounts receivable aging detail. We got a collections report tracking us trying to collect on the receivables, the work we have done in the past. Customer balance summary, customer balance detail. These two are going to be similar, one giving, of course, more detail about the activity, but are the most direct subledger type of report. Then we got an invoice list. Invoices are the things that increase accounts receivable. So if they're outstanding invoices, you would expect that would sum up to what the AR or accounts receivable balance is. Invoices and received payments. Now the received payments represents the paying off of the reports. So this could be thought of kind of like as a more detailed accounts receivable report still, because now it's going to show you not only the invoices that have not been paid, but possibly give you detail about the received payment forms, the decreases. And then the open invoices, which is the open invoices should be the same thing usually as the customer balances, the customer balance detail, because it's going to show you the open invoices being the balances that they owe you because they haven't yet paid those invoices. The statements are the things that we send out in order to try to collect on the invoices instead of sending out a follow-up invoice, because the statement would summarize multiple invoices if there's more than one outstanding. And then we've got the terms, which are just on the invoice themselves, when do we want to be collected by. Unbilled charges, these are going to be charges for items that we wrote on expenses that have not yet collected on. Unbilled time, similarly, these are time that we incurred, that we put into the system that we're going to bill on but have not yet invoiced or billed for them. So the primary subledger reports are going to be these two. Now, when I say subledger report, note that from an accounting standpoint, textbook standpoint, you would have accounts receivable over here, and then each of these accounts have been constructed by what we would call a general ledger type of account, which here we can think of as the transaction detail. So if I go into this report, for example, drill down on it, this report is what we might call a general ledger type of report, which they call a transaction report. And it's going to be breaking out the activity, what constructed the imbalance of this account by date. So it's going to be sorted by date, and then we have the forms and so on and so forth. That's great, but doesn't give us enough information for some kinds of accounts. Some accounts we need more information, such as the accounts receivable account. We also need to know the amount, not just by date, but by who owes us the money. So if we need to restructure the data in a different organized form, from an accounting standpoint, we usually call that like a subledger type of report, as opposed to the general ledger, which every account has and is broken out by date. So the primary subledger report would be just breaking it out by who owes us the money. So if I go back on over here,